Hey, what's up you guys? This is Junior Trader, and in this video, let's take a look at, is this the top forming on Netflix? Why so, and is it the top? So we'll talk about all of that in this video through the lens of price action and the structure, and what are the key important zones and the levels to watch for those particular confirmations of either if we continue higher up from here, or is this the top, right? So let's jump right into it. Once I let you know that none of this is any financial advice and is only for education purposes, I'm just sharing here my opinion. Please go into whatever you want to do, okay? So Netflix, what it was doing back then, well, level by level, it was, and pivot by pivot, right? It was just making higher highs and higher lows. This was the previous area that I talked about. If we break out of this zone of 651, it will just continue higher. And then next pullback to watch was at this blue box that I put up here at 664. We had a wick down there in that cool off and continued higher. Now, it's at another very important critical level that if we lose 673 and 47 cents, we more likely are going to form this double top. Now, double top is a bearish pattern. All right, it comes at the top. Now, usually what we want to see in such cases, if for the bulls to negate this double top formation, is one of these levels. Now, I'm saying one of these levels because I'll provide you another level. As long as these levels can hold, so first would be 673 and 63 cents, and the second level is still 664. If Netflix can still continue to hold this level, overall structure will still look bullish on this thing. Until then, it's just a cool off and intraday shorts can be traded. As you can see, this is coming a little bit of a supply zone up here, right? Now, the reason this time, why you asked Junior Trader, why wasn't the previous time this double top over here when we were having this second candle come and then we were going lower? And the reason for that, guys, was that this extension that we have here, so into this pullback, what we had was a very strong green candle in a single day take up the space up there for the at that time of high, right? This time what we are seeing is that it took 2 days, 2 candles. That means that yes, bulls are still in control, but the strength is a little bit weaker. And what usually happens when you have such a strong green candle taking out a lot of previous red candles is we have usually any pullback into this demand zone is usually gets bought back up, but also we didn't have any other level over here that would be constituting as a break of, like in this particular case, 673, and then going down to 20 days moving average. Back over here, things were still looking up here. There wasn't a strong sell-off that showed us that it's taking out the 2 candles range. This time, we have one red candle taking out 2 previous green candles range, and previous time we had one green candle taking out multiple red candles. So you get my point, right? There was much more bullish strength still, but this time there's just more bearish strength because there's one red candle taking out multiple green candles. So just a little bit be cautious. However, yes, intraday short plays may continue, and if we continue to lose 673 and 72 cents, I'll talk more about on hourly interval in just a second. But yes, this would be the last line of defense, 663 and 87 cents for the bulls, at least on this currently ongoing upside. Now, if we lose 664 eventually, I would still say that, again, guys, if I'm missing out by a dollar or a cent in the iterations as I'm talking through, I'm not going to be penny to penny perfect, so I'm just giving a very high level area. You can just use my significant levels here to identify where's that exact place is, right? If you have access to my tools, that's great. If you don't, if you need, links are in the description below of this video. All right, so yeah, if we lose 663 and 90 cents or so, again, I'll just still say level by level to the downside. But that opens up the door then to 650 and maybe potentially 635. But we are still not there yet. Intraday cool-offs may continue, but this, if it has to start to form a double top, we have to start losing this area of 664 as well. Yeah, and otherwise you will just look at the lower time frame where the consolidations are forming, where the supports are forming, and accordingly you can take the position. So for example, in this particular case, if you see this consolidation starts holding around this significant level with 200 hours moving average at 673, green candle starts to come, or some strength starts to show up, then intraday upside may start to continue. May not happen today, we will see if it happens next week, but you'll have to see the price action at the lower time frame for that. All in all, yes, weakness is there right now. Intraday it's weak, and if this is the formation of the top, then we have to see the break of those levels. Otherwise, there is still areas where if bulls wants to keep it bullish, they can keep it bullish. All right, so that's Netflix. I also want to take a look at how's the daily short volume percent coming on Netflix these days. So let's plug it in. Yeah, it's been fine. It's not that it's quite a dramatic sell-off or dramatic short volume percent. Netflix is a very highly institutional traded stock, so you would not expect or not see much short volume percent on this on day-to-day basis as well. But yeah, I'd just like to see. It's interesting to see. But yeah, it's mostly yeah. There's nothing on the there's nothing on the short volume side that tells me that, oh, there's something big going to happen. No, it's just normal short volumes happening on this. All right, well, let's take a look at 5 minutes as well. And yeah, on intraday, you can see we are in the lower trend. So definitely the weakness is there. And yeah, until where this weakness would continue. Yeah, guys, so at this point, if you want to see intraday upside, if maybe not today, then next week, then 678 upside on intraday will continue, break above, may continue higher up. Otherwise, if we stay below 678.26 that will just be a little bit of a rebound. Some weakness may continue, and then this is another level, right? 673 break below that is then coming down to the blue box or around 20 days moving average, at least in the near term. So, and then eventually we will see if this is where the double top is going to be. So yes, not for now. I would say technical is still in the bullish structure, but weakness is there, and we will see if that this eventually results into a lot more downside. But as I said, this time one red candle is taking out two previous green candles, and earlier there was one green candle taking out previous red candle. So you can understand that the strength sentiment is a little bit on a different direction right now, which is on the sell-off side. So just keep that in mind. But yes, structure is still bullish, but I gave you the levels, what to look for, where those break would be. Yeah, it's a big cap stock. It's not gonna just chip doesn't just gonna turn around in a single swing of a wind. So, but that's that. All right, I'll see you in my next videos, guys. Take care. Bye.